For thousands of years, going all the way back to the beginnings of recorded history, mankind has been obsessed with gold. The ancient Egyptians believed that gold came from the sun and that it was the flesh and bones of the gods. The Incas thought of gold as the rain of the sun. The desire for gold has spanned across cultures and time, and there are many reasons for this. Firstly, gold has some truly amazing physical properties. Despite being the most beautiful element, gold is also one of the most durable. Impervious to corrosion, gold is timeless, immortal, and indestructible. A bar of gold can survive a house fire without losing its form, and all of the gold ever produced still exists today. A golden bar bought today could have particles of gold in it that an Egyptian pharaoh wore thousands of years ago. Chemically, gold won't bind with anything but itself. If you take a single ounce of gold and stretch it out, it'll reach for 35 miles. Adding to its desirability is its scarcity. It is an exceedingly rare element, making up only 3 parts per billion of the Earth's crust. Despite its universal popularity, there have only been 187,000 tons ever produced, and all of it could fit comfortably underneath the Eiffel Tower. Because of its unique physical properties, gold has served as money for over 4,000 years. Throughout that time, it has driven our species to literal madness. The lust for the shiny yellow metal has destroyed civilizations through conquest and the environment through mining. In many ways, the story of mankind's past has been the story of gold. But is it our future? Let's begin with its basic investment thesis. To an investor, gold's most desirable trait as a money is its scarcity, which allows it to serve as a store of value. So far, we have mined over 180,000 tons of gold, which is its stock. Each year, mines produce an additional 3,200 tons per year, which is the flow. This gives gold a 58.8 stock-to-flow ratio and an annual rate of inflation of 1.7, which is roughly the same growth rate as the global population. Compare this to the monetary inflation of the US dollar. From 1971 to 2021, on average, the monetary base of the dollar has grown at 9% per year. Since January 2020, the US government has printed an astounding 80% of all dollars in existence. We've lived in a pure fiat system since Nixon suspended the dollar's convertibility to gold, and the absence of gold backing has allowed governments to raise debt to absurdly unsustainable levels. Because gold supply cannot be increased or controlled by a third party, it is the ultimate protection against the infinite money printers of the US government. As monetary irresponsibility inevitably increases, so should gold's price. As currently reported, the top 10 central banks in the world hold 23,000 tons, and the International Money Fund holds another 2,000 tons. Total, this is over 10% of all of the gold on the planet, and 8,000 of those tons are in the United States. In the West, countries like China and Russia are stockpiling gold like never before. Over the past 10 years, Russia has tripled their gold reserves. In China, Stephen Lieb, PhD, author of China's Rise in the New Age of Gold, believes that China is working on developing a gold-backed monetary reserve system to dethrone the US dollar. If this is true, he believes that a powerful bull market could push gold's price as high as $20,000. Whether or not this is their plan, they are undeniably hoarding gold. China is the world's largest buyer and producer of gold, and they are exporting exactly 0 bars per year. The money printing of the United States and the accumulation of the metal in the East have set the stage for gold to become one of the most sought-after assets on the planet. Because it has a relatively fixed supply, based on the basic laws of supply and demand, if demand rises due to growing distrust of governments, the price should, in theory, rise, and rapidly. In light of the recent rise of Bitcoin, many have begun to question the monetization of chunks of metal in an increasingly digital world. It is true that, in some ways, Bitcoin is superior money to gold. They are both scarce, divisible, and mediums of exchange. However, Bitcoin is much more portable and secure since it does not require physical transportation or storage. Despite the technological innovation of Bitcoin, gold has not become an obsolete asset. In fact, I do not believe they are even competitors. Gold is nature's money, and it will always serve as the ultimate hedge against any kind of societal collapse. If all the electronics on the planet stopped working, gold would still serve as money. Overall, gold is a low-risk, high-value asset with significant upside potential over the next few years. In E.B. Tucker's new book, Why Gold? Why Now?, he advises a minimum 3% allocation to gold to defend the portfolio against the infinite money printers of the U.S. government. In the uncertain times we are facing today, it can certainly be comforting to own a little gold as a foundation of a diversified portfolio. However, this is not financial advice, and everybody should do their own research and determine what works best for them. What do you think? Is gold going to shine in today's chaotic macroeconomic environment, or will it get eclipsed by the innovation of Bitcoin? Let me know in the comments below, like the video, and subscribe to the channel. Thanks for watching.